Hi, you're listening to the Coffee and Books Book Talk. This is Scott. Welcome to Coffee and Books Podcast. Oh yeah, my book talk where I talk about different books I read. Today we're talking about the stock market. A couple of things to get into. This is my take 3 of this, so bear with me here. The stock market, it's a fantastic, great opportunity machine. That's what it's described as in this book. This book is written by Matthew Krader. He's basically an author for Trader University. This is a really good introductory book about the stock market to give you tips and tricks. It's about 100 pages long. I read it in one day, and I basically wanted to tell everyone about it because I have an interest in the stock market as well. But before I get into it, I wanted to tell you guys I'm not a financial planner or investor. I'm not somebody who is experienced in all this. I just do this for fun. So with that being said, I think you guys would like this book, and here's why. This book is, like I said, the basics of what a stock is. It's going to cover that history. It's going to cover how to do things like buy and sell and trade, in the stock market world. It's going to talk to you about, things like, when the economy is in a recession or depression, or, when it's doing well, what to do. It's also going to talk to you about, margin loans and all that exciting world. But basically, this book is a great introduction. So what is a stock? Stock basically is where a person in the public can invest and buy a small ownership for a piece of it of the company. This is how companies raise funds typically to, make more profits and more investments in their business. You might hear about those things. A company that comes out might be called an IPO, or initial public offering, where it comes out to the public for the first time and people buy and sell that product. Okay. So the idea of basically buying a stock is that you're going to buy something for a lower value and you're going to sell it for a higher value. And having said all that, it's going to basically require you to pay attention to what's going on in the stock market world. You might have seen today, for instance, that stock market is down. That is not always the case. Sometimes that can be a good thing now, because as somebody who's a new investor or somebody who's learning about the stock market world, buying stocks when they're at a lower priced value typically means, and hopefully means sometimes later, the stock will go up in value and you can make some profit off of that. That's not always guaranteed. That's probably the biggest thing, is that some companies go bankrupt and you could lose what you have invested in them. This is typically well known, especially for things that are called penny stocks or low value stocks. I wouldn't even recommend buying a stock that's valued under $10 because the market is so volatile for those. So you want to invest in companies that you're interested in, companies that because they're going to give you more of a solid background that typically turn a profit. And basically, in order to make money, there's a couple ways of doing it, but the biggest and safest one that most people do is they invest long term. Long term being over 20, 30, 50 years. Buying when you're young and selling when you're older, and then taking that profit and then basically generating it and giving you a little bit extra income to your portfolio when you're older. It's riskier because, in a sense, we don't know what trends and interests are going to be around in that length of time. If you think of Blockbuster, they went out of business. Netflix came in business and kind of disrupted all that. So you don't really know what's going to happen in 20, 30, or 40 years from now, and what's going to succeed and what's not going to succeed. So that's the advantage and disadvantage to that, is that typically something is worth more over time, but it's not guaranteed. And like I said, you don't know if they could go bankrupt or not over time. So that's why I need to pay attention to what's happening in the market. Number 2, another way to making money is called day trading, which a lot of people do, but it's also a lot riskier. And day trading would be if you do the same thing, buying at a lower value and selling at a higher value, but you do that at a day basis, a day by day basis. And that can be really hard to do because there's no guarantees day to day of how a stock is going to perform. And you could listen to all the investors and all the people and analysts out there and wait till an earnings report comes out. You could, read about how a company is doing. It's not going to give you the answers. It's going to basically give you some questions. Maybe you might want to know more about a company, but there's no guarantee of making a profit every day. So having said that, day trading can be more profitable because it's short term, but it's also more likely to lose as well. And like I said, I covered kind of, smaller stocks, but there's also things called, growth indexes, where you can invest in a group of stocks, over time. That's a really good thing to do. And basically just the main thing I recommend people to do is to research about companies they're interested in and figure out how they're performing. And you can look at their years of history, find a broker that fits you best. For instance, that might be Robinhood, or that might be E-Trade, or Ameritrade, or any of the other companies out there that deal with mutual funds. Or you might want to be considering just watching it just to see what happens. A safer bet is always, like for instance, I tell people you get interest when you invest in the stock market, yes, but there are other ways of generating interest, that are safer. Things like CDs generate interest, but they're lower value, so you're not going to make a huge profit from investing in a CD. But it is possible to generate interest on a savings account and on a CDs as well. So if you want something safer, you could consider investing in a savings account or CD account. If you want something that is more likely to make you money, investing is a good opportunity, but like I said, it has more risks. Anyway, that kind of sums up everything about this book. And what did I rate the book? I would give it a 3 out of 5, and this is why. It's short, it's to the point. A lot of it I kind of already knew as a beginner, but this is a good introduction to coursework. So if you're a student, this is basically like the dream of like, I don't know anything about it for my economics class. This would be a good kind of introduction to everything. But as somebody who kind of was a little bit more familiar with stocks, this was kind of like just scratching the surface. So I want to read more. And as somebody who has an interest, it's like I said, kind of like just the tiptoe of the iceberg, and it's really small. It's a good little short book, but it was extremely short, and I wish it was a little bit longer. Now, I'm probably going to check out more stock books in the future, kind of to see more about the economy and the way things are going. But if you want more tips and tricks about what books I'm going to read next, definitely let me know and follow me. Don't forget to follow this book talk and share it with your friends. Like I said, the stock market is a pretty interesting place, and you can definitely make some money off of it. So thanks for listening, and hope you guys all have a great rest of your day.